protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman. We've got a great discussion for you today, and we appreciate you checking out the show. Make sure you subscribe wherever you get your podcasts. With that said, let's jump into the show. Now, I've done a lot of radio shows in my career. You've done a lot of radio shows, Chris, and as a matter of fact, we've done a lot of radio shows together now.
Yes,
and
we have.
We have talked about a lot of stories on those shows and a lot of financial topics that I think have provided a lot of great insights for the listeners out there. And a lot of those conversations begin with what's in the news, and those stories begin with headlines. But sometimes, well, a lot of times, the news isn't exactly clear or helpful. And just getting ready for today's show, I was gathering up some topics and ran into more mixed messaging than I knew what to do with, so I'm going to share it with you. Here are some examples of the articles that I was parsing through. Trump's economy hasn't blown up under tariffs. Is he proving naysayers wrong? Economists blast Trump's claim that American economy is booming. Market rallies toward all-time highs after better-than-expected inflation data. Top economist says U.S. is on precipice of recession. So you kind of get the idea here. Things are either going really well or they're on the road to ruin. So for folks out there or folks who are reading these things in general, it creates a lot of stress, a lot of anxiety, and we can definitely feel that when it comes to our financial confidence and measuring that. So, Chris, I was hoping you could talk to us about how we get to that place where the news is just something you read or something you watch and not something you have to react to when it comes to our financial life.
Your financial plan should completely decouple you from the news, because if you're going to trade the news, guess what? You're late.
Yep.
So Trump's economy hasn't blown up under tariffs. Is he proving naysayers wrong? That's a big time question mark. But if you're looking at a singular point in time, you can make a strong argument that tariffs will have zero impact on inflation. You could also make a strong argument that they're going to have a large impact on inflation. Who cares, folks? I literally, who cares? If there's high inflation out there, they're going to have to raise interest rates. That's going to help you in retirement to generate higher levels of income to spend. And by the way, if you're in your 50s or 60s, your debt structure should be diminished. So if your debt structure is shrinking, you're not going to be impacted massively because of inflation on that, right? Ignore the news, folks, and start to build your financial plan and your financial life independent. Because over the next 30 years, so right now we're talking about the news, which is instantaneous. It's like in our face all day.
You cannot escape.
Yeah, you can't. Like the phones and the iPads and the TVs and the radio, it's just in our face all the time. If you ignore the momentary news and look at your life being the next 30 to 40 years, you will see it all, folks. You will see high inflation. You will see low inflation. You will see markets that roar to new highs. You will see markets that stumble and fall. You will see tax codes change multiple times on income levels, potentially on capital gains. We don't know. But you've got to plan it out over decades and say, in a high inflationary environment, am I going to be okay and safe in my financial plan? Check the box. In low inflation environments or low interest rate environments, am I still going to be okay? Check the box. If the market hits all-time highs, am I going to take advantage of those? Check the box. If the market falls by 30 or 40%, am I going to not be wiped out financially and put my retirement in jeopardy? Check the box. Check them all.
Right.
And that's what a financial advisor needs to do for clients. And it drives me nuts when people are watching the news and they're worried about, I think Trump's going to get elected, or I don't think he's going to get elected. And you make decisions based on something you have no control over. Control what you can control.
Yeah.
Control your own financial life. Control your spending levels. Control how much income you can generate. Control the tax codes in your favor. Control your protection rotation strategy. If the market does fall, you can reinvest. Or if the market's shooting to all-time highs, like it has been recently, are you taking advantage of it? And do you know how much of your money is tied to what? And are you beating your benchmarks? So, yeah, you can go through these lists, and economists blast Trump's claim that American economy is booming. Who cares? Whether it's booming or not, the market's at all-time highs. We want to take advantage of it. And if the market starts to slide, folks, you can't blame Trump. You can't blame the economy. You can't blame the markets. You need to blame yourself or point the finger at your financial advisor and say, why didn't you prepare me for this event? And that's where I think the big box firms fall down every time. They look at you and they put their hands in the air and say, everybody's losing money. What are you complaining about? Well, it doesn't feel good. It was like when I was 22 years or 23 years old and my CPA called me and said, I have good news and bad news. The good news is you made more income this year than last year. Congratulations. The bad news is you're paying massive amount of taxes. He didn't say massive. They were massive to me.
Yeah.
And I'm like, wait a minute. You're not supposed to call and congratulate me and then take my money away. You're supposed to call and congratulate me and tell me a tax strategy to keep my money.
Right.
So stop trading the news, folks. Stop being paranoid about the news. Stop being fearful of the news. Stop being euphoric about the news. Get your plan in writing and make your financial advisor check every box on every possible scenario. Now, that's a lofty goal.
Sure.
There are some black swan events we face, right? But we know what black swan events do. They hammer the markets. So we can predict that. And the markets, if you look back over the past 30 years, have been pretty predictable. They've had their corrections. They've had their increases. And over time, they seem to keep chugging upward. Fixed income. It has its lull. It has its benefits. And there are good fixed income products out there. So you've got to look at it over a period of years, not days or minutes. So, I'm 57 years old. I've been investing since I was 13. It's incredible to think that 20 years ago, you literally couldn't get a stock quote unless you waited for the newspaper in the morning that showed yesterday's close, or you go down to a Quotron, a green screen, and plug in a ticker symbol.
Yeah.
Now it's in our face.
Yeah.
And is that dangerous? It could be, but if you build a plan that checks all the boxes, you'll be just fine, and you should live the retirement of your dreams and not have to worry about the news. Worry about it from a social perspective. Wars shouldn't be looked at as, is it going to hurt my portfolio? It should be looked at as people are losing their lives, and that's not comfortable, and we don't want to get sucked into a war. So you got to build kind of a fortress, I think, around your financial life. And that fortress should be able to take high inflation, low inflation, high markets, low markets, high tax rates, low tax rates, and you just brush it off your shoulders because you've got a plan that checks all the boxes.
Controlling the controllables. I like that because I feel like that's something that can apply to a number of different things in life, and most certainly to that financial planning. We've talked about wanting that smart financial planning. To do that and to have that, you do need to be informed. So let me ask you what may be a rather basic question here, but can you explain the difference between market noise and those meaningful financial signals and how we filter through one to find the other?
Yep. So in a nutshell, I would say that the immediate news and the announcements of here's unemployment rate, here's the inflation rate, here's what's going on with the markets, that immediate news should be completely ignored. You've got to look out and say, okay, what's deeper in the economy? It's almost like the way Warren Buffett or those more established high net worth investors operate. United Healthcare is a perfect example, right? Warren Buffett just loaded up on United Healthcare as a stock. Why? Well, it was depressed. Unfortunately, the CEO was killed, and they had a rough earnings month. And the news was pushing hard on healthcare is under scrutiny. Insurance companies are under scrutiny. And he said, the stock's down 30%. And he's looking at net asset value of the stock, and he's saying it still has positive earnings, that he's looking at breakup value of companies, and it's valuable. So that's what you look at. You don't look at the news and the particular drug. Now, you can get pretty deep into that as far as healthcare, pharmaceuticals, etc. But the fundamentals never change. They are fundamentals. It's all the road noise that gets passed back and forth day over day over day. And it's just basically built for entertainment purposes. But it's starting to control the markets a little bit.
Let me ask you this. I was just kind of thinking about the way you described that as road noise. I mean, we've all been on the road, and maybe over on the other side of that road that you're driving down, there's been an accident. Right. Traffic is stopped. And then you have rubberneckers who are busy looking that direction and figuring out, oh, what's happening over there? Well, what are they doing in order to do that? They're taking their eyes off of the road in front of them. And I think that has some application here, I would imagine, too. Like, you want to have your focus in the right place, I guess, to make a long story short.
Yeah, how many people have been rubbernecking, staring at other accidents, and caused an accident themselves? So, yeah, keep your eyes on the road. Now, let's talk about road noise from this perspective. Let's say you hear your tire starting to thump, 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 and your steering wheel starting to drift to that side. You know you've got a flat. In that case, you're going to have to pull over. But have you prepared? Do you have an account with AAA? Do you have a spare in the trunk? And are you educated? And I'm talking to the 50-year-olds now and laughing because a 20-year-old cannot change a tire on a car, right? No. But us older guys and gals, yeah, we know how to torque a lug nut wrench and get a tire off and jack it up. But do you have a plan? Do you have a spare tire? Do you have AAA? Do you know who to call? Are you prepared? So we've all been there, right? We've been, something's wrong. Yep. And you get that adrenaline rush. And people are getting that over the stock market. Mm-hmm. So it's very simple. If you pull over and you've got a flat and you're prepared, your stress level comes down. If the markets shift or your income needs shift and you've got a plan, you're not anxious. You just shift. It's a plan that is flexible around where you are in your life. You need to dictate to the markets. You need to dictate to the economy. You need to dictate to your financials. Don't let the market dictate to you how much income you can generate, how much protection you have, how much growth you're going to get. Let's list it all out. Let's set our targets, and then we hold ourselves accountable as your fiduciary advisory team to deliver in all markets, not just the ones that go straight up.
Well, let's get you on the road to a successful retirement. You want a fiduciary advisory team building a financial plan that is designed to accomplish all the things that make up what a successful retirement looks like for you on every leg, every mile of that journey. That's what Hoffman Financial Group specializes in. Let's get started today. The Portfolio X-Ray, a great way to do that. It's complimentary, no cost whatsoever to size up where you are, find out where you are on the map in order to chart the course for that retirement. 404-341-6767, 404-341-6767, or find us online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.